Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcana, along with Dennis Dick, and I have Jeffrey Hirsch on the line. He is editor-in-chief of the Stock Traders Almanac, speaking to us live from New York City. Jeffrey, how you doing this morning?
Great. Good morning. How are you guys?
We're doing good. Well, let's just first start out with January. In fact, it's now 1 month removed here. Market sprinted higher in February.
hmm
Just from a seasonal pattern from your studies of the markets. What's the market trying to tell us so far?
Well, I think it's telling us it's choppy. It's concerned about a lot of things. Wants to go higher, but we've got a Fed and that's looking like it's going to tighten, in a world that's looking a little bit scary, shaky at times. So, but January's down, February's up. I looked at that. And it's not a whole lot of super positive action after that. I mean, it's about half and half. It's about 14 other times where we had since 1930 when the S&P was down for January and up for February, and the previous 13 times, we saw the market drop 7 times, and for the whole year, and only rise 6, and for an average about -2.5%. So, I mean, the last 4 times it's happened, it's been positive for the market. But it's not the only thing. There's one additional indicator that we're waiting for here, something called the December low indicator, where it's an old strategy or an old indicator that if the market closes below the December closing low in the first quarter, that's a watch-out sign. So we've held above that. So that's reassuring for the moment.
What do you think of this reduced volatility in the market? Just the last, I'd say, 2 weeks here. It seems like the S&P futures are just sitting here and kind of doing nothing. Is it just waiting for another catalyst, like something overseas news, or is it waiting to hear more from the Fed, or is this just going to be the new trend where, because we saw this last year and when there wasn't much going on, we saw volatility really get low, and then it really picked up there. We had the Ebola crisis, or we had the Ebola thing, and then obviously we also had Greece concerns there at the beginning of
Right.
this year. But now that all that seems to be off the table, at least for now, volatility is just really low here. Do you see that trend continuing?
Well, I mean, not necessarily for an extended period of time. I mean, what that's telling us is that there's not a whole lot frightening the market anymore. I mean, things look rather scary, even though we're only down about 5% in January. Different places. It wasn't that bad of a sell-off. The Greece thing scared everybody. I think some of the geopolitical and terror stuff has started people. Ukraine's had moments of more shock for the market, but right now there doesn't seem to be anything really startling the market, and it's just taking the weight off. And now we are here at new highs, looking for the all-time Nasdaq high, even though adjusted for inflation, which is a post we put out last week, the Nasdaq high was 7,000. So relatively speaking, we're nowhere near it on a inflation adjusted method. But the March period is kind of funny. The old saying, was it in like a lamb, out like a lion, or something like that. I think it's the other way around. But for the market, it's the first half's pretty bullish, and then we have this Caesar. Beware the Ides of March, which is kind of true because it's the end of the first quarter, and the end of March we've seen some nasty sell-offs. Even though it's a positive month, that last part of the month tends to have a volatility spike. So seasonally, I think it's not surprising that we have this low volatility, and on top of that, some of the events and things that were increasing that volatility have dissipated. So combination of seasonal and macro current event driven that this volatility has faded away, but I think it'll pick up again. We'll probably see some more of this during the summer as well, when the seasonal period is weak and we start hearing from the White House battleground. I think that might stir things up a bit as well.
You've been writing this, or your father started the Almanac quite a while ago, and you've continued on with it, and really like expirations and triple witches and
hmm
quad witches. I mean, that's kind of relatively new phenomenon. If you look for the period of time you went back with the Almanac, we are coming into a month with a quad expiration. Are there any kind of patterns there that you could point out to our listeners?
Well, yeah. The interesting thing is I mean, I don't subscribe to quad witching right now. First of all, it sounds funny, and I just don't see a whole lot of influence from the single stock futures. So I'll stick with triple witching. You know, I mean, I want to include them, but
it's a product that really never really has caught on.
Exactly. So no offense, but
we still call it triple witching.
But the seasonality has an impact on excuse me the triple witching effect, which you see the worst 6 months of the year, with June and September having rough triple witching times. The week after triple witching in September is horrible. December being one of the most bullish months, you have a very strong triple witching period. And March, as I was saying, the end of March is generally a little bit weaker, so you have some triple witching weak strength, but the week after has been quite rough. So that's the sort of, it dovetails with the end of the quarter action, which tends to bring portfolio adjusting and end of quarter transactions and that sort of thing. So the week after triple witching and the end of March is a difficult period.
Before we get into some individual issues here, we did a big show on Friday on the oil patch, and crude oil, as in the S&P, 2 of the top 10 components, ExxonMobil, Chevron, so far the market's been able to kind of shrug off the big declines in those and march to new all-time highs. Could you just give us an outlook on, crude and, these stocks? They still pay good dividends. Is this something that you might have on your buy radar?
Well, I mean, oil is an individual issue that we like. I mean, I have a position in USO right now that we've been building over the last month or so. I think we hit that bottom in January. We were calling for $40 oil, I guess, when we were about 60 or 70 in there, and now I think we can probably get back up to there over the summer. Not definitely, but the interesting thing, with oil right now is that you have this. I mean, I do seasonal stuff. That's in my blood. But I don't just do it in a vacuum, and we look for confirmations technically, and in the current trend, something we call a trade setup, a seasonal setup. And this year, oil has been almost picture perfect. It's been a bit steeper, with the sell-off being sharper than the normal seasonal period. But February is for the actual commodity. The future is where we see this as seasonal bottoms. The oil stocks like Exxon or the XLE, which we traded a little bit back in December, tends to bottom in December. So that's what's on my radar right now. That one of the main things is oil.
Jeffrey, does the rollover risk in the USO, does that concern you, or you keep it short term enough that you don't really worry about if you have to give up 0.75% to hold the position for a month?
What did you say?
The rollover risk, because USO is always buying that front run. Contract. Does that concern you, or you're short term enough that it doesn't concern you?
I'm not sure if it's that I'm short term enough. I'm not a futures trader, so I want the action of the oil, so I have to pay for somebody else to trade that for me. So that's part of it. But the way we like to buy things, we look for the valuation. We've down so much, and it's set up so nicely with the seasonals. And I think we have a fundamental support here that the worst fears of oversupply and under demand have gone past us. So hey, that's part of the game there.
Well, what's
that?
I was just going to say, we just talked about the crude. Just want to get your thoughts on gold here, too, because we pulled significantly off those highs that we were back just a month ago. We were kissing around 1,300. Now we're down here at 1,214. What are your thoughts overall on gold?
Well, I mean, it's a seasonal short for us, so it's another one that's set up nicely. Okay. And it's about February to April sort of sell-off. I think it's kind of almost a post holiday and even Valentine's Day, though I hate to say it, where there's a little push for jewelry buying. But seasonally, fourth quarter was always the time for gold. It still seems to be that way a bit, and we see the metal sell off and silver as well in this late February period for the next month or so.
Do you have a seasonal pattern for lumber?
I don't, and my friend, they do trade sugar, but my friend John Person, who does the Commodity Traders Almanac, or had done it with me, we're looking to resurrect that. He made a comment about sugar that was, how do you trade something that they're giving away free at restaurants,
That's a good point. The reason I mentioned it's this lumber liquidators. I'm not sure if you caught any of the news in it last week or the 60 Minutes expose on it, but here's a stock that hit 69 bucks on Wednesday. Now is trading under $40. I mean, is this, is these things you just kind of let everyone trade the headline news, or is this something where you might try and look for some kind of seasonal pattern or a technical level and get involved?
I mean, I don't currently have a seasonal pattern for lumber. I'm sure there is one. I wouldn't be surprised if it ran along the lines of a copper type, industrial construction material, something they're putting in houses. So I think that's an interesting thing to look at. But I don't have that research already done. I don't trade the headline news. You can. The one thing that I think is a good way to go for some individual investors, if there's something that you like or something that you frequent a certain place that's, or your bank or your utility, like owning your own utility is a pretty good hedge against the bills that they charge you for using the electricity or what have you. So I'm not a huge headline news guy. I like getting things that are when we pick stocks, getting that are undervalued, nice momentum, not too much, not falling behind the market, but not running too far away from it, and just a whole host of different fundamental and technical type criteria that aren't necessarily in the headlines. Sometimes they make it there. There was a stock that we picked that had something to do with the Ebola suits, the hazmat suits, and that just popped last year. It, really took off big, and then came back down to earth. So I like to be there before the news, if possible.
Okay, and also, we're looking the markets at all-time highs. People are trying still to find value in the market. Maybe not the high flyers or whatnot. And I guess you could call it, the headline stocks or something. But Blackberry, I mean, does that stock ever pop up on your radar?
I had a BlackBerry that I didn't like a few years ago, and I went iPhone personally. It was too much of a switch over, a learning curve. I needed like an IT person to know what I had to do. It seemed like it was more made for a large corporation to have everyone dialed in together. But I saw the new BlackBerry that my colleague had the other day, and it's looking pretty cool. I mean, I think just looking at the product, I think it's definitely the most exciting and positive thing they've done in 4 or 5 or 6 years or more. So that I think is a strong case for them. But the stock itself hasn't really come up on my radar otherwise.
Okay, one more stock, and we'll ask you about Apple AAPL. I mean, I guess the seasonal pattern for that is just buy it every month. I mean, this thing's been on quite a tear, getting some upgrade by the analysts, or not upgrades, but price target increases. Is there any stop in this stock?
Yeah, I think now it's time to begin tightening up a trailing stop at this time of year. We like Apple, but it's such a big percentage of the Qs and that sort of thing. We're playing the whole tech market. We picked up our position in technology and some others back into September, October swoon. So right now I'm more taking some leverage off and taking a little bit of profit and cutting some underperforming positions and tightening up stops, especially on the biotech. We like the biotech sector for the long haul, but we'll probably get out of it. The seasonality ends pretty soon in March, I believe. And again, with Apple and technology, that's sort of you're heading to the tail end of the seasonal period. It's run pretty strong with it, so I'm not sure if I would advise anyone to jump into it right now, but maybe be careful with the position that you have currently.
And we mentioned you were live in New York City at the Traders Expo, and I don't know if you have any of our Benzinga guys kicking around there at all, but any highlights from the Traders Expo?
Aside from my technical difficulty last night with the projector, I think for me, I get to interview a lot of people now. I'm hosting the interview, so I'm on the other side where you guys are. And I think interviewing John Bollinger, who has probably known me since I was a kid, when he met my father in the 80s at some event, and we stayed in touch over the years. It was just great to have him explain Bollinger Bands and sit and ask him a few questions. I think that was my personal highlight.
Okay, we've had Jeffrey Hirsch on. He's the editor-in-chief of the Stock Traders Almanac, a 25-year veteran of Wall Street, looking for seasonal sector trades. I guess a little bit cautious on the market here, not trying to pick a top, but certainly moving up your sell stops. Well, enjoy the rest of the Traders Expo. It's always great to have you on, and we hope to speak to you again soon.
Most definitely. Thanks, guys.
Thanks, Jeff.